This is Alex Perini from Summerhill Financial Services, just with another quick update. Just to comment about the federal election outcome and what it means from a financial planning perspective. We can expect changes as per the federal budget announcement earlier in the year, such as the removal of the work test requirement for making voluntary superannuation contributions for those aged 65 and 66, as well as an extension to the 3-year bring forward rule for these members. This essentially provides more superannuation contribution flexibility for those aged above 65. We can also expect an increase to the age limit for spouse contributions from age 69 to 74. And there are also a number of proposed changes to the marginal tax rate system over the next 6 years, with the intention of tax rate simplification, whereby it's expected approximately 94% of taxpayers will be paying no more than a 30% tax rate. These changes are yet to be legislated, so we'll keep you updated. More importantly, we can expect franking credit refunds to continue, along with the absence of the 10% income rule for personal contributions where you're claiming a tax deduction. Also, catch-up concessional contributions will continue. Several of Labor's proposed changes will not proceed further, such as the reduction to the capital gains tax discount, changes to negative gearing, and the standard minimum 30% tax rate for discretionary trust distributions. On another note, in February 2019, the federal government passed legislation under the Protecting Your Super reforms that requires superannuation trustees to cancel insurance where a superannuation account has been inactive for 16 or more months, unless the member tells the super fund they wish to keep their insurance. An inactive account is one that has not received any contributions, whether that be from an employer or personal, or rollovers from another fund. There are several reasons why one would have insurance in an inactive superannuation account, and from May, superannuation funds have commenced writing to fund members with low balances or inactive accounts to inform them that their insurance may be cancelled and to make an election to keep the insurance if they wish. We've contacted many of you to make the necessary arrangements for making your election, but it is important that you contact us if you received a letter from your super fund regarding the changes, and we'll provide assistance for making your election. Moving on, in terms of market valuations, many of you may notice cash building up in your investment or superannuation portfolios. We've seen markets performing really well this calendar year, and while that's been recently helped further by the election results, market valuations are starting to look a little high right now, particularly in the US, and vulnerable to a short-term pullback, so we prefer to not invest new monies at present. We're keeping a close eye on markets as always, but may consider holding off from making any recommendations for cash in your portfolios until investment distributions are paid in July. Finally, we've been included in a new app released by the Financial Planning Association called Match My Planner, which essentially helps Australians looking to connect with financial planners on various matters. This app is exclusive to certified financial planners, which both Caroline and myself are. And if you'd like to check it out, we've included a link to the app in the email. As always, if you have any queries or feedback, please contact us. Thanks.